Welcome to the first episode of Pax Economica. So today I wanted to talk about the bigger issues. I feel like a lot of the traditional media and even a lot of the online media tends to trend towards focusing on specific countries. In the United States, obviously, a lot of the media is focused on only the US, and they really do ignore most of what's going on in the rest of the world. So today I kind of wanted to talk about some of the issues that are going on in Asia and Europe, the Middle East and China, because I feel like the issues that those countries in those parts of the world are encountering are similar to what's going to be happening in the United States as well as other countries as well. So first and foremost, I think the biggest issue to talk about is the issue of energy. Russia specifically, along with Kazakhstan and the Ukraine, most of the Middle East and North Africa, their biggest economic product is oil, petroleum, and gas. The issue that's arisen is currently related to the way that Russia dominates the European gas market. With Gazprom's multiple pipelines going directly from Russia to Western Europe and some of the Northern European countries, Russia has a very big impact on the supply of natural gas to Europe. So the United States has recently been pushing to push exports more on Europe, particularly with the coal as well as the liquid natural gas. The thing is, Russia and Gazprom more specifically is on the verge of pushing through Nord Stream 2, which would provide a leg of the pipeline stemming from Russia going directly to Germany, bypassing Ukraine, bypassing all of Eastern Europe, and going through territory that the United States wants more direct economic control over, particularly with Poland, Belarus, and the Baltics. The Northern European countries, for the most part, they trade with Russia, but they're not really as friendly towards Russia as they are towards the EU. They do have common trade interests. Specifically, they need energy as well. Everyone needs power to survive. Everyone needs fuel for heating. And as the seasons get colder in different parts of the world, they're going to need more gas. And this is where Russia really comes in. Having such large natural deposits and so much in reserve, Russia is able to supply the entirety of Europe with natural gas at a very low cost. And that frustrates the Western powers because they don't want Russia to be able to do that. They want to supply Europe with cheap power. They do not want Russia to be profitable in that way. A little bit of background about Gazprom. They are the creation, following the collapse of the Soviet Union, of the accumulation of state oil and gas assets, particularly the pipelines, as well as a lot of the drills and the wells that exist were actually a part of that. And so Gazprom supplies a lot of Europe with their natural gas. The other thing is they are becoming one of the largest suppliers of natural gas to China. And regardless of what happens in China, whether their economy completely grinds to a halt or it falls into a free-falling depression, Russia's still going to be supplying them with gas. I think that's something that most people overlook. It's that no matter what happens with the politics, the power is still needed either way. And even with the push into renewables, the vast majority of China's power consumption and power production is not from solar energy, it's from coal and natural gas. And that's just a fact of life. Now, Russia is the biggest supplier in that part of the world, and especially due to the United States' very exclusive agreement with Saudi Arabia, in which Saudi Arabia created the petrodollar, where all of Saudi Arabia's oil would be sold and priced in United States dollars, thereby pegging the value of the US dollar to the value of a barrel of oil from Saudi Arabia. Obviously, there's humongous problems with that. You can't sustain a currency based on a non-renewable energy source. That doesn't really work. Oil in its raw form can't be used. You have to put it into something. Whereas gold and silver and precious metals are used for currency to provide a hedge against inflation, whereas oil does not do that. So the petrodollar is directly threatened by the growth of Gazprom and of Lukoil, Surgutneftegas, and there's a variety of other oil and gas companies in Russia and Eastern Europe, many of which just simply want to do business, develop more infrastructure, and continue providing a very necessary aspect of people's lives for them at a very affordable cost. And especially from an investment standpoint, Gazprom is a penny stock. It's under $5 a share. It pays a decent dividend, and they're incredibly cheap priced compared to companies like ExxonMobil or Chevron or even Total or Eni. And Gazprom definitely has a place in the world because they have so much money. They have business in Venezuela. They're looking to do more business in South America. A lot of Brazil's offshore oil fields are up for auction, and that's definitely something that Russia is looking to get into. But overall, the main conflict stems over energy supply to Europe, and then indirectly energy supply to China, because the United States is also one of the biggest suppliers to China. So Russia is basically encroaching on the United States turf, which they think they're entitled to. And the thing is, Russia is completely capable of functioning as an independent economy, free of foreign interference, and can provide a variety of necessities to their own people without having to outsource the labor, particularly Russian agriculture, which is now amongst the world leaders in terms of wheat production and food crop, which, as the earth continues to warm up and more of Siberia and the permafrost melts away and thaws, Russia will have tons more land, not just to expand into and develop, but also to exploit for energy resources, because they have even more oil and gas underneath the ice that they haven't gotten to yet. So Russia really stands to be a dominant player in the natural gas and oil markets for decades, if not maybe even centuries to come. So the United States wants to limit their ability to compete with them, because if there's a big competitor to the United States has a harder time dominating the entire market like they like to. They can't hold countries hostage at rates for a price of oil such as $150 a barrel, because no one in their right mind would want to pay that much for oil when they know that they can go to Canada and buy it for $35 a barrel. And especially as Canada and the United States are such close trading partners, oil and gas are two of their biggest products. And so the more that Russia grows their economic reach in the oil and gas markets, the less room the United States and Canada will have to muscle in on them in Europe. If the infrastructure is already there, the price is relatively cheap, and the service, the fuel is reliable, there's really not much reason why a European country would want to switch from Russian energy to United States energy simply just to spite Russia. That's not really how the world works. That's an American perspective that Russia is somehow the boogeyman in all this. But to tell the truth, they're just looking to do the same things the United States is. The only difference is it's pointed out openly in the media. I wanted to move on to China and what's been going on there, because I think that plays in very, very well with energy and commodities and resources. I don't know if you know this, but China has had quite a hard time growing their private sector. Now, since the United States opened up relations with China, China has been expanding private sector development. They've allowed for foreign investment through a variety of financial vehicles into their economy. They've allowed foreign investment into their stock market. And China has definitely made decent progress towards opening up their economy on a global stage. The problem stems from the fact that China's central bank, much like the Federal Reserve of the United States and the European Central Bank for the EU, prints unlimited money. Whereas in the United States in 2008, when the entire stock market ground to a halt and the recession was in full effect, General Motors had to be bailed out with over $100 billion in taxpayer money. That doesn't even include the amount that was handed out to the 5 big banks of Canada by the Federal Reserve Bank in New York. Now contrast that with China and what China's been up to. It's very apparent that their central bank is grasping at straws, because the people of China can only have so much money in each account. A family can only own so many houses, many of which remain vacant. So there's a huge slowdown coming in China. That doesn't mean that they will require less energy. Russia will be there to supply them with natural gas, most likely in the hundreds of billions of dollars over the next few years. But the way that China's state planning works, the government decides how much of each resource is set for a quota. So they need to mine such and such amount of palladium, platinum, silicone, whatever the resource or material is. The government ultimately decides how much of it needs to be mined, produced, or exported, or sold domestically. So when they build these houses in these massive city-long housing blocks, the homes are remaining vacant because the people who own them live in the cities along the coast. And the Chinese government's idea was, if they build the houses, people will come towards the interior of the country away from the coast to try and alleviate some of the population density problems. It hasn't really worked. But what it's done is it's inflated their housing market to such a bubble that when it collapses, they're going to be seeing humongous drops in value, which will destroy most of the real estate wealth in China, because it's predicated on debt. The Chinese government will bail out any and every company that exists within their borders should they need financial assistance. It used to be that only state-run companies would receive state bailout money. The thinking was the private sector needed to get on its own, and with shareholders aplenty all over the world and in China, there's really no reason why they can't provide funding to their own domestic companies. However, a few years back, the Chinese central government decided to deregulate and instead give them total control over everything. So the Chinese government has ended up inflating multiple bubbles, producing tons of cash money that doesn't truly have any real backing value to it. They are beginning to price Chinese oil futures in yuan and backing them with gold. However, that whole concept hasn't really caught on a global scale to make it a viable alternative to the petrodollar. Despite their partnerships with Russia, it really isn't apparent as to whether or not there will be a competitor to the petrodollar anytime soon. As we've seen with Venezuela, they are experiencing hyperinflation due to the unlimited printing of money. All that's done is make the country itself in a far worse position than it was before. And I bring up Venezuela because they also have some of the largest oil reserves on Earth and are one of the biggest players in OPEC. So for a country like Venezuela to have hyperinflation, it's not too far-fetched to suggest that the same thing could happen in China and the United States, where the central bank just continues printing money indefinitely without any regard for what happens to the value of the currency and completely devalues it to zero, just like every fiat currency since 1024 AD. What this would do is it would set off a chain reaction of events, where as the US dollar would fall in value, the rest of the world's currencies would go up in value, because that's what was holding it down originally, was the US dollar was just too strong. But if the Chinese yuan collapses too, that's the world's biggest trading partner. And that doesn't really bode well, because with lower valued currency, you would need to print more to offset the deficit. And as we know from the United States, the last 80 years, you can't print your way out of a deficit. You can't disappear the debt without properly forgiving it. And the debt is how the central banks hold countries hostage. It's how the IMF does its business. See example Argentina. And Turkey's much the same way, where they had a thriving economy several years ago, and as inflation has increased, their central bank did not raise rates, and it really messed them up. Now they're paying the price because their currency is being devalued. But if the US dollar were to just start declining, Turkey's lira would go back up in value, because the strong US dollar was making it very expensive for Turkish businesses to export to the US. What this all really comes down to is a global race for energy dominance. It's not new. This has been going on for centuries. The difference is, instead of having just one country, the United States, being the dominant player, you now have countries like Russia and China and India. Even in Europe, you have the United Kingdom and Germany and France and Italy, countries that are very, very powerful on the global stage, but don't really have the financial situation to support such global ambition. To just wrap this up, I just wanted to say that my investment strategy for last year centered around focusing on the opportunities out there in the world. I think that in terms of, for reliability, infrastructure is always a relatively safe bet. Even if it's undervalued currently, infrastructure will survive and continue to grow as the rest of the world catches up to the United States. They're going to be building lots of infrastructure across Asia. They're working on potentially a trans-African railroad to connect one coast to the other, dramatically improve trade, dramatically increase revenues, and there's going to be a lot of development going on. I think that my strategy of investing in other countries will be very rewarding this year, mainly because it's more predictable to see entire countries that function centered around certain industries having an easier time doing business as the US dollar gets weaker. So I hope you guys have a good weekend, and make sure to never stop learning.